This is a DirectorsTalk interview with me, Giles Arbour, and Robin Savage, Research Analyst at Zeus Capital. Robin, nice to talk to you again.
Angie?
Now, XPS Pensions Group reported its interim results to the 30th of September. Robin, I wanted to talk to you about the numbers that they released. The revenue is increased by 113%, but only 3.3% pro forma, and the cash operating profit increased 63%, adjusted EPS increased 8%, and interim dividend per share increased about 10%. Why is there such a difference between the headline revenue growth and the adjusted EPS growth?
Well, Zefinity acquired the pensions and administration businesses of Punter Southall in January 2018. Both these businesses had similar revenue. The combined business had a historic revenue of 106 million. So by combining the two businesses, they're able to get over 100% revenue growth, which is why the revenue growth headline is 113. The Punter Southall defined benefits administration business has been number one rated for many years. The margins in this administration business are typically half those in pensions advice or consulting. This reflects the very long-term nature of the administration contracts, and also conversely reflects the high level of expertise that's required on the pension advice and consulting side. So by combining these two businesses together, what you're combining was a much more profitable Zefinity business with a business which was making half the level of profitability, but was still a very good long-term profitability business in Punter Southall. The acquisition of Punter Southall was a £150 million deal, part financed by debt and part by equity, and it was designed to be earnings enhancing for the Zefinity shareholders. So the underlying revenue growth for the year, which should be over 6%, should lead to over 10% growth in adjusted earnings and dividend per share. And at the interim stage, which obviously is only half the year, in fact less than half the year in terms of the seasonality of the business, has led to pro forma growth of only 3.3%, but actually adjusted EPS growth of 8%, and the board felt comfortable enough to increase dividends by 10%.
Sure, okay. So how would you describe the outlook for XPS Pensions Group?
Well, I think we need to look at the four different divisions because the recent trading and the outlook for each division is different. So there are four divisions. The XPS Pensions is the advice and consulting part. That contributes over half the group's revenues. Then there is XPS Admin, the market-leading pensions administration business that generates about a third of the group's revenues. And the rest, which is about 14% of group revenues, is equally split between XPS Investment, which is an investment consulting business with 43 fee earners producing reports on the performance of various pension fund asset managers, and the defined contribution administration businesses that Zefinity had, which are that provide SIP and SAS schemes, administration support, and also National Pension Trust, which is a defined contribution platform where the assets have grown by 40% per annum. So if we go through each of those divisions in turn, starting with the last bit, the final business units are delivering double-digit growth in contracts, in number of contracts, in value of contracts, and also in revenues. And the incremental profit margins are well above the average, which we expect to be 24.6% for the current year. The XPS Admin has won a number of big mandates. For example, the Aviva pension scheme, staff pension scheme, which came on board in August this year. And this will also benefit from the acquisition of Kier Pensions, a small acquisition of a public services administration business, which completed on the 1st of November. And while the profit margins in the pensions admin business are half those of the other business units, the 400 odd schemes that it services generate a very high level of recurring revenues and enjoy high retention rates. So what we would say there is that is a business which is steadily growing but also benefiting from acquisitions and new business wins. Now the final bit of the pie is the XPS Pensions, which contributes over half of the group's revenues, and this is dependent upon the 321 fee earners, typically qualified actuaries who generate time-based fees from close to 500 client firms. In the first half, these fee earners were focused on the important process of integrating the businesses, and we should and they were distracted from the equally important, I suppose less important task of actually growing revenues and engaging with clients. So in the first half there was maybe less revenue than you might have expected being generated, and there was essentially no growth in the first half on first half. For the second half, management indicates that XPS Pensions has secured valuable new projects, has numerous sources of revenue which will be able to deliver growth over the coming years, and the incremental profitability of this additional revenue is high, certainly higher than average, but sort of around about 30% rather than the 25% for the group. So all in all, now that Xafinity is fully integrated with Punter Southall, each of the enlarged group's divisions are focused on revenue generation in the second half.
Brilliant. Okay. Now, XPS is trading at about 161 pence a share. Is this attractive in current market conditions?
Well, I think investors should look at valuations from a number of different perspectives, and I'd say yes in all different perspectives, but I will start off by talking about the attractions in the current volatile equity markets. Secondly, look at the value in terms of dividend yield and growth. And thirdly, look at the value creation that's taking place in its own market segment and broadly. So if we think initially in terms of what is XPS Pensions Group compared to other equities that are out there, well, XPS has 100% UK revenues with 100% UK costs and with a business model that thrives on uncertainties. So I think you almost built to be a beneficiary from Brexit uncertainty and other uncertainties around the world. So actually when trustees or corporate sponsors of defined benefit schemes are concerned about what's happening to financial markets, to interest rates, to government regulations, they need to talk to their advisor, consultant, and who better than XPS Pensions Group to tell them how to sort out their problems. So secondly, in terms of the dividend yield and growth, if you analyse the interim dividend, which is, if you analyse it, you would get to 6.9 for the full year, and it's trading at 161p, offering a 4.3% dividend yield, with prospects of 11% growth for the next 3 years. So given that the equity market itself is trading on a 4.3% dividend yield, growing at 6% per annum, I think what you could see is it's delivering a market dividend yield but with better growth prospects, and given my first point, with a business model which is designed for uncertainty. And the third point is, whereas XPS Pensions in the total market, pensions is a slow-moving business. I think we all recognise that. Clients think about making a decision, then they eventually take a decision, and then eventually they enact the decision, like change their administrator or instruct a risk reduction project, or they transfer assets from one provider to another, for example, from a pension scheme through to NPT. National Pensions Trust. So it's a very slow-moving business. These results, XPS Pensions results, provide evidence of growth from the admin side, from the investment side, from the SIP and SAS and NPT clients. It shows evidence of new projects coming on board. And more importantly, these new clients, new projects, which will convert to revenues in the second half of this year and in coming years. So there is a compounding slow growth over a number of years, which should have hugely beneficial impacts on investment returns to the shareholders who buy now.
Sounds good. Okay. Talking to us today was Robin Savage, Research Analyst at Zeus Capital. Robin, thanks for joining Directors Talk today.
Thank you.